fill in the blank. If a country in the Middle East decided that they wanted to buy a lot of Bitcoin, I don't think they're taking over Bitcoin because 99% of the Bitcoin is in someone else's hands, and they triple the price of Bitcoin. And so the 99% of the people that hold the rest of Bitcoin just got 3 times as powerful. And so there's no way for someone to join the network and undermine the network. They're strengthening the network as they join it. What they would do is if a big player in the Middle East joined the network and became embedded and had skin in the game, if the US government took an adverse position, you would have another sovereign that would take the opposite position.
Hello, lovers of cryptocurrency. We're delving into the risky realm of BlackRock's recent Bitcoin engagement today. The drama surrounding this financial giant's entry into the crypto arena has everyone talking. The CEO of BlackRock and former Bitcoin skeptic Larry Fink once referred to the popular cryptocurrency as an index of money laundering, with BlackRock, a significant Wall Street player, moving to introduce a spot Bitcoin ETF. The cryptocurrency world is now a flurry of excitement and worry. Larry Fink's journey from a vocal critic to a participant in the crypto market sets the stage for our exploration. There are concerns about BlackRock's possible effect as it attempts to negotiate the complexity of the cryptocurrency market given its close relationships to regulators, particularly in light of the U.S. Securities and Exchange Commission's anti-crypto position under Gary Gensler. BlackRock's capacity to accumulate and manage a sizable portion of Bitcoin through its ETF is a major concern for opponents. The iShares Bitcoin Trust, IBIT, is presently holding an amazing 187,531 Bitcoin, valued at over $12.59 billion, according to recent statistics on BlackRock's website. In a bold move, BlackRock recently made its largest single-day purchase, acquiring 12,623 Bitcoin, raising eyebrows across the crypto space. We want to clarify the nuances around BlackRock's Bitcoin acquisitions in today's video, as well as answer any concerns over the company's ability to have significant market power. Along the way, we'll examine the facts and theories and consider the regulatory environment and how it could affect the expansion and independence of the sector. Come along on this thought-provoking trip with us as we seek the opinions of analysts and industry professionals. We'll put together BlackRock's entry into Bitcoin and analyze the possible effects on the larger cryptocurrency ecosystem with Michael Saylor. Let's hear what he has to say.
I think it's continuing to decentralize. I think that every single time you have a new participant in the network, they decentralize the network further. And I think that the more participants we have, the less likely it is that someone will corrupt the network. I think that if you have powerful companies and powerful owners in 100 different countries, the network is less likely to be corrupted. Its integrity is enhanced, because now you have strong political actors with a vested interest to keep anybody from attacking the network. Fill in the blank. If a country in the Middle East decided that they wanted to buy a lot of Bitcoin, I don't think they're taking over Bitcoin because 99% of the Bitcoin is in someone else's hands, and they triple the price of Bitcoin. And so the 99% of the people that hold the rest of Bitcoin just got 3 times as powerful. And so there's no way for someone to join the network and undermine the network. They're strengthening the network as they join it. What they would do is if a big player in the Middle East joined the network and became embedded and had skin in the game, if the US government took an adverse position, you would have another sovereign that would take the opposite position. Mm-hmm. So if you're worried about one country or one company having an influence, then the best thing that could possibly happen is have 10 other companies in 10 other countries, because now you have a network of interdependencies and you have checks and balances throughout. And I think that we've got more and more checks and balances, and as people invest more in the network, they become more conservative, and they will resist, enthusiastic proposals to fix Bitcoin. Mm-hmm. Right? It's like it's very easy. I notice that most enthusiastic proposals to fix Bitcoin come from people that don't have any Bitcoin. Right? And if you actually bet your entire country on Bitcoin, then you wouldn't be so enthusiastic to tinker with the network. If you bet your entire company on Bitcoin, then you wouldn't want to tinker. So ironically, these bigger actors are actually more conservative. They like it because they can trust it, and they can trust it because no one's changing it. if you take certain other crypto networks where they change them every 6 months and they tinker with them, every time you do a hard fork, you could destroy the entire thing. So who isn't in favor of hard forks? It's generally the protocol developers that want a job. They want to do something to help. They're the only ones that can do the hard forks. So they're the ones who promote them. Who doesn't want to do the hard forks? It's everyone that's bet their life, their future. If you're actually planning, if you're buying a lot of Bitcoin to give to your great-great-granddaughter, you're not terribly enthusiastic about a roadmap with 6 hard forks, right? So I think that there's no way for any one actor to get control of the network. All you can do is empower the rest of the network by a factor of 100. And owning a lot of Bitcoin doesn't really give you power. I mean, the network is stabilized by a combination of computer power, electric power, political power, economic power, right? And transactional power. So, Coinbase and Cash App have power, but that's different than the BlackRock power. And that's different than the Marathon or the Riot or all the Bitcoin mining power. And that's different than the power of all the node runners. And that's different than the power of the regulators or the politicians that support it. And so there's a lot of different power in the network, and it's just getting more decentralized.
Saylor recently presented at the Bitcoin Atlantis conference, emphasizing a different viewpoint from seeing companies like Fidelity and BlackRock as competitors. He declared that those who still don't understand the importance of Bitcoin are its only opponents. Rather than being rivals, BlackRock and Fidelity have actively joined the effort to strengthen the network as they have acknowledged the increasing demand for Bitcoin among their customers. The executive chairman of MicroStrategy explained to Natalie how every new member of the Bitcoin family, whether from Fidelity, BlackRock, or their wealthy customers buying ETFs, amplifies the network's overall voice. He clarified that by adding their voices to the millions of current supporters and retail investors, their voices strengthen the Bitcoin ecosystem as a whole. In response to the astounding performance of Bitcoin ETFs, Saylor also noted in a BitMEX research study that these ETFs' aggregate assets under management, AUM, already surpass $52 billion. This accomplishment is especially notable because it exceeds half of the $91 billion AUM of actual gold ETFs. Saylor provides insightful analysis of these occurrences that deepens our knowledge of Bitcoin's increasing importance in the financial world. But that's not all. Let's get back to Saylor's interview.
I expected the ETF launch to be successful, but I think it's quite impressive just how successful it's been. At this point, we can see that these ETFs are going to surpass gold ETFs in not too long a time. The Bitcoin ETFs are the most successful ETF launch in 30 years, and apparently in the first 30 days, they outperformed every other ETF. They've crawled to the top of 3,500 competitors in short order. And I think that they have sparked, the bull run and the upward movement in the price. I mean, definitely there's a huge amount of institutional capital flowing into Bitcoin right now that is driving the price because of asset scarcity. I think the most important thing, or the most important result of this is the ETFs themselves represent regulatory clarity for Bitcoin as the institutional grade crypto asset. I think that's a very important thing. I think secondarily, the ETFs represent an on-ramp for institutional money, and they open up a gateway between $100 trillion or more of institutional money and Bitcoin. I think the third thing is they have sparked this price action, and as Bitcoin moves back toward its all-time high, they have generated an extraordinary amount of media coverage and Wall Street awareness, and Bitcoin benefits from the awareness of the asset class, because as of now, 99% of the mainstream investors really have an incomplete understanding of Bitcoin, and the best thing that we could do is just build awareness that it is an asset class and then people will start to do the work to understand what it is. And so all three of those things have been catalyzed over the past month by these ETF launches. It's like Bitcoin didn't have a website, right? Bitcoin didn't have a website for institutional investors, and about a month ago, Bitcoin all of a sudden became something. You type it into, your Bloomberg, you type it into your Robinhood app, or you type it into any stock, E-Trade or any stock trading app, instant information. You can buy, you can sell. And of course, those ETF tickers, they don't just give people, perfect awareness and ability to transact. That's also the global protocol for trading volatility or for issuing credit. So if I had a bunch of money in Bitcoin and I wanted to get a loan against it, it might take me a month or 2 months to find someone that will give me a loan. Then I have to move to Bitcoin. Then I have to pay double the interest rate that's normal. And that's kind of scary. But after the ETF, people could have the same economic value in Bitcoin with JP Morgan or Merrill Lynch or Bank of America. And they could just say to this broker or banker they've been doing business with, like, I bought a house, I want a big mortgage on it, and I'm going to post a little bit of my Bitcoin as or securities as down payment against that mortgage, and I use it to get a mortgage, or I use it to get a margin loan, or maybe I could hedge against it. And so these ETFs opened up an entire financial world of awareness and opportunity and functionality to the 99% mainstream investors. And you really can't underestimate just how profoundly important that is.
Michael Saylor shared his hopes and enthusiasm for the growth of Bitcoin exchange-traded funds, ETFs. He starts off by saying that although he expected the ETF launch to be successful, it has been remarkably successful. According to him, Bitcoin ETF launches are expected to be the most successful in the last 30 years, eventually surpassing gold ETF launches. Saylor claims that the extraordinary success of Bitcoin ETFs may be attributed to their superior performance in the first 30 days when compared to other ETFs, quickly rising to the top among 3,500 rivals. He contends that these ETFs were essential in starting a market bubble and propelling the price of Bitcoin upward. Saylor highlights three important conclusions drawn from the popularity of Bitcoin ETFs. First of all, he believes that the ETFs position Bitcoin as an institutional-grade cryptocurrency asset by providing regulatory certainty for the cryptocurrency. Second, he sees the ETFs as an important institutional money on-ramp, opening the door for large quantities of institutional capital, perhaps more than $100 trillion, to enter the Bitcoin market. Finally, he thinks that the ETFs have brought significant attention from the media and Wall Street, which has assisted in bringing Bitcoin one step closer to its peak and expanding the perception of it as an asset class. Saylor concludes by saying that the ETFs have not only helped mainstream investors become aware of Bitcoin, but have also introduced them to a whole new world of financial possibilities. This includes the ability to deal with ease, obtain information instantly, and potentially use Bitcoin as collateral for a range of financial products, including margin loans and mortgages. All things considered, he emphasizes how crucial ETFs are to extending Bitcoin's utility and reach across the larger financial system. Until next time, happy investing.